Is the Fed going to cut by 25 or 50 basis points? Are they going to set pace to give us a full 100 basis points of cuts throughout the course of 2024? Well, stick around and find out. I'm going to give you my thoughts on what the Fed's going to do and what all the markets and how they're going to react. So we're going to put it all together for the week ahead video. So make sure you all stick around for it. And I'm glad that you're here. My name is Blake Morrow, and we are going through the week ahead video for September 14th, 2024. As you can see behind me, we have our 8th annual sale. And these prices, most of you know this, they don't stick around for a long time. We'll have it out here for the remainder of the month, but after that, it's gone. And when it's gone, it's gone. I'll tell you what's involved with Forex analytics in a little bit later, But what we're going to do is we're going to talk a little bit about the Fed, talk about this week, the reactions to CPI, producer prices, everything that is really moving the markets and what's going to be moving the markets this next week. So make sure you stick around for all of that. Now, this is the Forex analytics platform. For those of you that don't know it, I'm going to get myself out of the way and let's talk about the Fed and kind of the response that we've seen this week. So first and foremost, I just want to talk about the euro and the dollar in general. Matter of fact, let me skip through the euro. I'm going to go to the dollar index. And you can see that the dollar index, and by the way, I am filming on a Friday, so the market is still open. You can see all the data is still moving. It's usually I tend to film these week ahead videos on the weekend, but I had to do it on Friday this week. But you can see how the dollar has had the rejection of the underside of that triangle, keeping the downside pressure on the dollar. Now, obviously, a break below this 100.60 would be very, very bearish if we get it. I don't know if we're going to get it. And that's when we start discussing, about the Fed. And so let's talk a little bit about the Fed and what could possibly happen this week. So everybody knows a rate cut is coming. There is discussions there. There could be a front-loaded 50 basis point cut this next week. I don't want to say I'm not in that camp because I can argue both situations. One of them being, the data doesn't really warrant us front loading 50 basis points of cuts. And if they did, the market would probably have a negative reaction like the stock market, and sentiment would turn sour because people would want to know what is the Fed seeing that we're not seeing that could really, give us that type of move. Now, if you think that the dollar, and looking at this example right over here, if you think the dollar is going to rally if the Fed only cuts by a quarter, you might get a knee-jerk reaction, dollar response initially, but it's more about the press conference and it's more about the pace that the Fed is going to be setting for the remainder of 2024 because the market's still pricing in 100 basis points of cuts in 3 meetings. So if we don't get a 50 basis point cut this meeting, the chances are they're going to pocket that for the November or December meeting. And so if they stay and they maintain that language that they're pretty intent on being dovish. Inflation's come down to their target, and the economy, it's showing signs of that it might need to be, well, that it's moderating, but more importantly, that they can bring rates down to a more neutral level, what they see as neutral. Then the fact of the matter is the dollar could fall even if there is only 25 basis points worth of cuts. So when you see the Fed first give us their statement and they make a decision, 25 or 50. I think it's a 50-50 chance that they do, and I'd probably lean more to a quarter. If they give a quarter and the dollar starts to rally, that doesn't necessarily give you the green light that you need to be buying dollars. You need to actually sit and listen to what the Fed chairman has to say, his tone, and the summary of economic projections that he's given out, that the Fed's given out. That will lead us to believe whether the Fed's going to be able to deliver 100 basis points this year or not. So the dollar's reaction is going to be pretty crucial from here because if you look at the charts, a break below 100.60 would be bearish. This would be a bearish breakdown, and we're pretty close to support right now, obviously. Now, a move back above 102.10, 102.15, that means we're going to start challenging the underside of that triangle. That means that we're in a much bigger, longer-term range. I'm not sure what we're going to get. I'm not sure what the Fed's going to give us, so it's going to be important to react to that data when it comes out. Now, I do want to spend some time going through, what's happening the rest of the week. You can follow along via Forex Analytics. You can follow along on some other calendar, whatever you want to do. But let's talk about the remainder of the things that are happening this week, because it's not just about the Fed. It is also about the BOJ. It's about the Bank of England. We have the South African Reserve Bank is also making a decision on interest rates this next week. So it's going to be a big one. It's going to be a big week, no matter how you slice it. So starting with Sunday, Monday, Japan's on holiday. They have now. I think I want to move to Japan. This is their holiday that they're celebrating. It is Respect for the Aged Day. Well, considering I'm over the age of 50, I might get a little bit of respect, so I think I might move to Japan. Just kidding. But that's a crazy holiday. Anyway, they're going to be celebrating that. China is also celebrating an autumn holiday as well. Now, moving through into the remainder of the week, we have the Empire State Manufacturing data that comes in Monday. Tuesday, in the North American session, we will see the Canadian CPI. Now, Canada will have not only the CPI data, but they'll also have retail sales at the end of the week. But if you look at the dollar CAD, and remember, I wasn't with you guys last weekend. I want to extend a thank you to Ryan Littlestone for filling in on the week ahead video. I was traveling to Salt Lake City last week. He did a great job. I actually watched the video while I was in Salt Lake. He did a great job on the week ahead video. So a lot of the drawings that you see here are going to be from 2 weeks ago. But as we talked about it 2 weeks ago, we were looking for a recovery in the dollar CAD. That's what I have drawn in green, that we're going to recover back to the 136 level. Well, guess what? We're there. Now the question is, where is the dollar Canadian going to go from here? Now I want to show you a couple of things. Let's delete that Fibonacci level. Since you guys and gals have all seen, we hit the 618, so let's delete this. Now you know that there's a huge pivot through here. Now we've talked a lot about it and how important this level of resistance is. And you can see what we're doing is we're just pushing right up against it. The dollar Canadian is in play next week, either for a breakout to the upside or for a resumption of trend to the downside. Now you might remember over the last couple of weeks, I showed you the CFTC data that was heavily skewed, that hedge funds were looking for continued Canadian weakness, suggesting that they were targeting a move well above 140. Well, guess what happened? That positioning got screwed when we broke through that 135.90 level, as we have been discussing, and we've seen the CFTC positioning, also the commitment of traders data also reflect that. So what I'm going to do is I'm going to show you what that chart looks like, because you'd probably remember it from a couple weeks back. But now that we're here, the data is more, how should I say? The data is more, it's more balanced. And if you look at, let's go over to like a 20-year chart, you'll see that green line that we had been discussing about it being too many hedge funds were short Canadian dollars. We saw a big reversal over the course of the last couple of weeks. Actually, that's not going to work. I have to do it like this. Let's see. This might even give you a better view here. Over the course of the last couple of weeks, we've seen maybe 1 year. 1 year is going to give us a good look. Yeah, you can see over the last couple of weeks, we've seen that trend actually reverse. And so that made sense. But what I'm mentioning to you now is the market is much more balanced at this point. So if you look technically, high to low. Okay, let me get rid of this blue one. Now you'll notice that the 38% retracement comes in right around 136.30. Above that 38% retracement, it gets bullish. While we stay below it, you got to stay defensive with the dollar CAD. I will talk about the dollar CAD a little bit more extensively a little bit later on, so make sure you all stick around for that. All right, continuing on. Tuesday we have U.S. retail sales, which could be a market mover, but not so much because of the FOMC on Wednesday. Now, before we get to the FOMC, though, we have UK CPI. Let's take a look at the sterling, and we were looking for dips in the sterling to hold. I drew a couple of lines here. This is from 2 weeks ago. I said, well, we could get as low as here, or we could get as low as a 38% retracement and find some buyers. What did we do? We found retracement to the 130 level or the 38% retracement just below it. And now what you'll see is developed is a bull flag pattern. Now, I'm not 100% convinced yet that this bull flag pattern is ready to trade to the upside. I will have to get confirmation from the Fed. But if we do, and we have a very dovish FOMC, and we have strong UK CPI, there is a good chance that the sterling could make a stage a rally towards 133 and beyond towards 136. So that is entirely possible in the days and weeks ahead based on what happens this next week. The other central bank, one of the other central banks that are meeting is the South African Central Bank, the Reserve Bank of South Africa, SARB. You'll see that we are holding the 127% extension. So any break below 1760 would be very bearish for the US dollar South African rand. I have been trading the US dollar South African rand to the short side a couple of different times over the last several weeks, but this could be the catalyst that really drives this currency pair lower, especially if we have a dovish Fed and a more hawkish South African Central Bank. So keep an eye on that on Wednesday ahead of the Fed. Now, once again, we will talk about the Fed. I want to talk, I think I'm going to have to talk about, I had the dollar index. I want to show you guys the euro because I think the euro is pretty important. It's going to act a lot like the dollar index, obviously just inversely. What we've seen about the euro is pulled back to support. Now, that support level actually coincides with a lot of charts. So let me go ahead and show you how important this level has been. Now, let me get rid of myself here. Okay. And let's do a little bit of analysis. Let's get rid of this bull flag pattern that obviously completed. So let's get rid of that. We don't need that any longer. We don't need this for now, but I want to keep us on that triangle. You can see the triangle, right? That's how important these levels of support are. And I think looking at this triangle, you want to be able to hold that, especially if you're bullish. Now, if you look at a couple of different Fibonacci levels, low to high, that is a 50% retracement of that move. Low to high, that's a 38% retracement of this move that held. So the 38% retracement was very important support for the euro. Now, obviously that's a support zone. I can delete it because you guys have seen we've respected it. But what's more important about what you're seeing here is now we have just like the sterling, we have a bull flag pattern in the euro. So what does that mean? Well, that means on a breakout higher above 111, it's going to be pretty bullish. Now, the question mark that I'm going to have is, can we continue higher early next week ahead of the Fed? And I'm not sure, but there is data. Like I said, we have U.S. retail sales. Maybe that is a catalyst that drives us higher if the retail sales data is weaker. So we're going to be keeping an eye on the euro dollar if it breaks through 111, because that would be a continuation move. All right, continuing on. Oh, not continuing on. So I gave you my spiel about the Fed, and I want to stop for a second and just reiterate that it is a toss-up between, are we going to get 50? Are we going to get 25? But be careful to react initially. Like I said earlier at the very beginning of this video, and if you're just skipping through the video and you're just getting to this section, maybe you want to go back and listen to what I said earlier about the Fed. Be careful of reacting before the press conference, because really how the stock market reacts, how the dollar reacts is going to be more based on how the Fed frames up the remainder of 2024. And so that's in my opinion going to be the catalyst, whether we get continued dollar weakness, or we end up getting a reversal and seeing some dollar strength after the FOMC, which could elicit a very, very big move since so many traders have been shorting the dollar. Now, I want to say so many traders have been short in dollars. So many institutions have been. But if you look at retail sentiment is very bullish the dollar, which is not going to work well if the euro dollar continues higher. That means if the euro dollar continues higher, retail traders will get clobbered. The euro will probably climb back above 112. So just be mindful of the technicals that you're seeing right now. All right, continuing on throughout, after we get past the Fed, we have New Zealand GDP and Australia employment. So let's do a little bit of work here with the Kiwi. And as you can see, the Kiwi has broken higher, but now we are developing what? Well, guess what? We're developing a bull flag pattern. Yep, just like the Aussie, just like the. Oh, I just gave it away for the Aussie, but I'll show you that here in a second. So here's the Kiwi. There's your bull flag pattern, right? However you want to draw it. There's your bull flag pattern. Remember, we have New Zealand GDP. We also have Australian employment, which you can see. I still think if the Aussie dollar can clear this resistance, it's going to be very bullish. But look at the bullish bull flag pattern that is developing. So you guys, I guess the point I can make right here. Let me stop once I draw this. I'm showing you the Aussie. Now, obviously, we have Australian employment. I just showed you the Kiwi. That's a bull flag pattern. I just showed you the sterling. That's a bull flag pattern. I just showed you the euro. That's a bull flag pattern. What happens when all of these bull flag patterns break out to the upside at once? That's when you get follow through. So be aware that we are seeing flag patterns everywhere. Matter of fact, as I come back to the Canadian dollar in a few minutes, I'll show you that the bear flag pattern is in development there, going the opposite direction. All right, Thursday we have. Oh, you know what? I misspoke. When I was talking about South Africa. So let me just go over really quick. When I was talking about the South African rand, Wednesday is actually CPI. Thursday is their interest rate decision. So if you're trading South African rand, I want you to make sure you make note of that because I misspoke. Right? Excuse me for doing that. And remember, if I ever misspeak through these and I say something that's incorrect, please jump down in the comments below and let me know. I'm trying to go. I'm going from the cuff, and I just continue on. In this video, we don't edit. I don't stop for editing. So if I say something that sounds incorrect, make sure you go down below and make the correction for me. I appreciate that. Matter of fact, this is a great time to talk a little bit about something else that's happening at Forex Analytics. I want to talk to you about the Trader Funding Program. The reason why I want to mention this is if you want to you want to capture this volatility that we're seeing in the markets, you should check out the Trader Funding Program. The Trader Funding Program is a way that you can access large amounts of capital, trading the markets. The great thing about the Trader Funding Program is we now are offering a 20% discount for the month of September. For the month of September, you can have a 20% off discount if you're new to the Trader Funding Program. Now, one of the things about utilizing the Trader Funding Program is that you're accessing not your own capital. You're taking an assessment to access our capital. So this way you're not putting your own funds at risk. So if you want to learn how to do that, or let's just say you don't have access to these types of accounts, then you should check out the Trader Funding Program. Also, one of the other things that we've been doing, and which I've made permanent, is if you are a new Trader Funding Program trader and you take your assessment, you get a 20% discount. You also get a one-on-one consultation with me for 45 minutes. I'll walk you through all the tools that you get. I'll walk you through on what to expect, and I'll give you some tips and tricks on how I pass an assessment. Also, if you're taking another assessment because you failed the first time around, which is not uncommon, if that does happen to you, and you have $100,000, $250,000, $500,000, or $1 million Trader Funding Program assessment, when you take another assessment, you'll get a one-on-one consultation with me. So make sure you take advantage of that, because we're going to walk through some of the issues you might have encountered and hopefully correct them so that doesn't happen to you again. So check out the Trader Funding Program. It's a great opportunity for folks that just don't have it available to them. All right, let's go back into the markets and let's continue on with what I was discussing about Thursday. So Thursday we have South Africa interest rates. We also have the Bank of England interest rate decision early in the morning. Now, the Bank of England is not expected to change or move on interest rates. But depending on how hawkish or dovish the BOE is, that could greatly influence what happens with sterling. So as you can see, we have a nice bull flag pattern in the sterling. We're at the 38% retracement, and we held the breakout point right here. So as long as we continue to forge out this bull flag pattern, you got to stay constructive. Now, the bull flag pattern on a breakout, as I just mentioned, takes us above 133, maybe close to 136. So very, very bullish setup with the Bank of England coming up on Thursday. Now, Thursday night, we have the BOJ, another central bank that's making a decision on interest rates. Now, we were looking for a rally in the yen and to roll over, and boy, did it. Now, it didn't reach as far as I was hoping it would, but these rallies are being sold. Now, take a look longer term. I want to show you where we're at, and this is where you have to start being very careful, being on the short side of the US dollar Japanese yen. If you look at the low, and let's go over to the daily chart, it's going to be better. If you look at the low back here from January of 2023 to the high this year in July of 2024, we are basically at the 618 retracement. So yes, we traded below 140, but did we get, or almost below 140, but did we break that 618? The answer is no. So the reason why I mention this is because the BOJ is not expected to move on rates. They're expected to move. If they're going to move, there's speculation they're going to move in December. But the fact of the matter is, the FOMC could be very dovish on Wednesday. The Bank of Japan could be more hawkish. And then that divergence of monetary policy could drive the dollar yen below 140. So keep an eye on the dollar yen, because the risk is building for a downside move towards the high 120s, or in this case, if we complete an ABCD pattern, you're talking a move down towards 128. So keep your eye on the yen when we have the BOJ on Thursday night, or it's Friday morning in Japan. Last but not least, on Friday, we will we'll have some comments from Macklem from the Bank of Canada 15 minutes before the Canadian retail sales. I know I talked already in great deal about the Canadian dollar, so we don't have to rehash that. Also, Lagarde is speaking on Friday morning. She's speaking at the let me make sure I got Mikhail Kamdesis Central Banking Lecture in Paris. I don't know if I got that correct, and so if I didn't, excuse my my pronunciations of that. All right, now that we're past like what's happening this next week is from an economic data standpoint, let's talk about some of the other markets. Let's talk about gold, because gold has been a massive breakout to the upside. Now, I want to just share with you where the we were looking for a move higher in gold. We've obviously been talking about it. You can see how relative strength finally broke out to the upside. I said, yeah, it was diverging. You remember 2 weeks ago, I said, yeah, it's diverging, but if we break out, it's going to break that relative strength to the upside. That is, it's manifesting right now. The question is, how far can it go? And I was just having a conversation with Jim Welsh from Macrotides. He believes that positioning is very stretched in the gold market, which from a retail point of view, I would assume is probably pretty correct, considering that you can buy gold bars at Costco wholesaler. I mean, how crazy is that, right? So if you look here of this tight range that we had for about a month, that range will give us close to 2,600. So let me just draw it out for you. Let's zoom in. Yeah, let me fix this. And let's look at that range. from there to there. Now, if you take that range and extrapolate it out from the breakout point, that'll take us to basically 25.95, 25.90s. We are almost there. We're within 10 points, and I'm assuming Sunday night, Monday morning, we're going to get there. Now, the question is, what will gold do when we get there? The fact of the matter is it's bullish while we're above this breakout point. But what happens if you break back below the 2600 level? Or excuse me, the 2535. If we break back below 2530, that would end up being a false breakout, especially on a weekly chart. Now, again, we're going into a really important week this next week with the Fed, the FOMC, the dollar, where the dollar's at. If the dollar sees a reversal and we see a reversal on gold, I think there is going to be room for a pretty big pullback. So just keep your eye on gold as we go into next week. One of the other things that big developments that happened this week was look at the bond market. Look at the 10-year notes. The 10-year notes still have some room to go to get to 117, which would be a very long-term trend line. Whoops. As you can see, that comes all the way back from post-COVID lockdown levels. That rally could take us all the way to 117. That means yields would come down. And what would that do to the dollar? You got to think about that if we continue to rally here in notes and in bonds. Bitcoin's back at 60,000. I thought that was pretty interesting today, but it's still very, very choppy markets. And the last thing I really want to go through today with you is I just want to talk about equities, because equities are very close to those all-time highs. Not a lot's changed. A lot's happened in the last 2 weeks since we last talked, but you can see that we are nearing those all-time highs. Now, we had a quick sell-off, following NVIDIA and some other earnings and a little bit of a shakeout, but the market's very buoyant and buyers are just coming in. As soon as we see some selling, the buyers step right back in, which suggests that the risks of a move to all-time highs is still quite high. But should we get up here towards the 127% extension, I still believe that would be a level that we'd be looking for a short, okay, if we can make it all the way to the 127% extension. Now, this is the time of the video that I want to review the setups from 2 weeks ago and then talk about the best, 3 setups from this week. So let's start with reviewing from last week or 2 weeks ago. Last week, the first one was sell the dollar index at 102.15 or buy it at the euro 110 equivalent and then look for a short. Well, we almost got to 102, but we did get to the euro 110 equivalent. What was the low this week? 110 and 0.3 of a pip. So, do you think that one worked? It was also short the dollar CAD at 135.60 to 135.70. We talked about that 2 weeks ago. Well, we did, and we've been kind of bouncing around those levels. But overall, did selling the dollar index on rallies work, especially if you're trading the euro? Yeah, and it worked really well. All right, that was from 2 weeks ago. The second setup, short S&P at the 127% extension. Well, that one never happened. Not saying it won't, because like I just mentioned to you, it looks like it might. But I think you keep this one still on the radar. It just hasn't happened. So we had one good one. One just hasn't happened, so it's a scratch. Third one, buy pound yen over the 200 DMA, targeting the 50 DMA to 147.50. Well, I'm going to tell you this right now. It happened on a Sunday night, and we had family over. I wasn't even looking at the markets. We actually hit the 200 DMA. We went over it on a Sunday night. Monday, by the time I looked at it, we were already back below the 200 DMA, so I did not trade it. But man, did we get slammed. We did this, but we never made it to the 50 DMA. So depending if, hopefully you just weren't around on Sunday night when the market opened in Asia. If you were, it didn't work out. If you got up like when I did and we were already back below the 200 DMA, I'm like, ugh, I don't want to touch that. then you could say one worked, one didn't, one scratch. Okay, so be it. And maybe for some of you, one worked, two didn't, or two just scratched, and so be it. Those are reviews from 2 weeks ago, and that was 2 weeks ago. So let's talk about this week. This week. Now, this depends a lot on the Fed. But if the Fed is dovish and the dollar continues to sell off, I am looking to buy the euro above 111.10 and then adding above 111.50 for a move into new highs with the euro. Because a lot of people don't think that that can happen, and I do. So I think it could really, really play to the upside. But how about if the dollar doesn't cooperate? How about if we do see some dollar strength? So this is trade setup number 2. If we don't see dollar weakness following the Fed, but we see dollar strength in turn, then I'm looking on the dollar Canadian, a squeeze above 136.30, 36.35, which is basically the 38% retracement. I'm going to look for the dollar Canadian to really squeeze higher if the dollar does strengthen. So that's trade setup number 2. So one of those two are probably going to work. Probably not both, I would think. All right. Because it's going to be centered around the FOMC. Trade setup number 3. Short gold on a move back below 25.30 only if the US dollar is rallying. So if the dollar Canadian is going higher and the dollar is going higher against a lot of different currencies, I am looking to short gold back below 25.30. As I think it, like I mentioned a little bit earlier, I think it would end up being a false breakout on a weekly chart, which is not good. So a move back below 25.30, I turn bearish. And that's got to be post FOMC as well. So guys and gals, I can't stress to you enough, take advantage of the pricing here of Forex Analytics, because people come to our website and they're like, wait, I missed the sale, and then we don't have sale prices for months. So take advantage of it. I mean, the monthly subscription cost of Forex Analytics is $150 a month. But if you want to bring that down towards like $100 a month or close, or maybe even slightly below, take the 40% off an annual subscription. I know all of our traders that have been with us for a long period of time, they are on the discounts and they continue to stay with us. And we continue to honor those discounts as long as you are an active subscriber. We don't give you the discount for this year and then next year automatically start raising your prices. That doesn't happen. You just get grandfathered in as long as you are an active subscriber of Forex Analytics. This is our 8th year. Happy anniversary, especially to you and the Forex Analytics family. And for those of you that aren't, I hope to see you in the family, because you'll just catch me in the chat room. This is where I'm at 15 hours a day. You can come in and talk to me and say, oh, wow, Blake's talking about Bitcoin and gold. And then you can come up here and start a thread and start chatting with me about what I'm seeing in the markets and everything else, just like we all do in this chat room. So be involved with the Forex Analytics community, be in our chat rooms, come join myself and the team, and be with like-minded people like us. All right, guys and gals, I hope you have a great remainder of your weekend. Thank you so much for your support. Hit like and subscribe. You can subscribe to the channel. It's free to do. It's free to hit like, and comment down below if there's any setups that maybe you've seen that are moving the market as well. My name is Blake with Forex Analytics. I'll catch you on the Monday F.A.C.E show. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.